In usual fashion, we will obviously pass over to you in a minute, Georgia, to present. If anybody wants to put any comments in the chat, then we'll open up the chat room. Please make comments there. And in typical pension playpen fashion, if you'd like to make a point, raise a question, challenge Georgia, or totally agree with Georgia, then raise a hand at any time during this wonderful presentation. But in advance, Georgia, I'd like to say thank you very, very much for taking the time to talk to us today. So I'll monitor the lobby, and without any further ado, Georgia, I'll pass over to you, and let's see the start of the show, as I say. So thanks very much indeed for joining.
Okay, thanks, Steve. Morning, everyone. Thank you very much for coming along to this Pension Playpen. I am going to give a quick talk about Tumelo and what we're doing. But before I do that, I guess I know Steve's suggesting you challenge me, but I wanted to kind of challenge you in the room, or maybe ask a favour, a combination of a favour and a challenge, which is to think about how we can best empower asset owners to shape the world that they want to create with their assets, because that's Tumelo's mission. And what I'm going to show you today is, I guess, the mechanism that we have designed so far to enable that. But what we want is to reach more asset owners and to help more asset owners shape the world. And so anything you can think of today as a challenge or as an idea or as a connection that would be helpful for us in reaching that mission would be greatly appreciated. So I kind of maybe give you that homework during my talk, and anything you can think of, we can hopefully discuss afterwards. So if I dive in, Tumelo may be familiar to some of you for our products that we have had in the market for a couple of years. One is Expression of Wish, where we help pension members to be able to have a voice and to see the companies they're invested in, and basically better connect to their pension through the power of stewardship. So you may have seen that product. It's live with Standard Life, with Legal & General. We work with Fidelity. Nest use our transparency dashboard, and LPFA as well use our transparency dashboard to show their clients or their members what is actually in their pension. So you may know us quite well for that product, which is still kind of live and kicking, and we're working really closely with big pension funds on that. The thing I wanted to talk about today is different. We call it pass-through voting, and it is really designed to help asset owners to shape the way they want to vote in a pooled fund. So if you are invested in a separately managed account or a seg mandate, then obviously you own all of the voting rights because all the shares of the underlying companies are in your name already. But if you are an asset owner who has exposure to pooled funds or multi-client funds or commingled funds, they use lots of different words for it, then you actually have no control over how the underlying assets in that fund are voted. And for Tumelo, that is the problem that we are trying to solve on day one, at least. It is to give asset owners control over the underlying assets within those pooled funds, as we call them. And we've been launching that product since January this year. We signed on with Legal & General back last year, but launched with their clients for this proxy season in 2024. And we've seen really, really good uptake from clients like, or LGIM's clients like Camden. We work with Bedfordshire. We've just launched with Sol, the superannuation scheme for the Universities of London. And we have more DC, DB, LGPS, endowments, and wealth managers all looking to use that solution to be able to influence the companies that they're invested in the way that they think is important to them or their clients or beneficiaries, depending on the kind of duties that institutional investor has. Now, I did have some slides, so I wanted to share them just to kind of show you how this actually works from a kind of mechanistic perspective. So if I just open the right window. Great, I'm hoping you can see a deck. Someone shout at me if you can't. It looks like you can. So there are different ways. I'm going to kind of talk through how this customization of stewardship works for an asset owner who wants to use it. So usually asset owners are looking to get some kind of consistency across their portfolio. So if you look at the diagrams on the right, the top diagram is kind of the status quo, where an asset owner's portfolio might be made up of some segregated mandate, a pooled fund from one fund manager, and a pooled fund from another fund manager. All of those different kind of asset types or investment vehicle types are going to have a slightly different approach to voting, or sometimes a very different approach to voting, which creates kind of conflict and a lack of consistency, which means that the underlying issuers are not hearing the asset owner's message, whether it's about CEO pay or gender diversity on the board, or simple old-fashioned governance, like how often you would re-elect an auditor, or kind of how overboarded a director is, or obviously the kind of more modern and important topics as well, like climate change or human rights in supply chain. The issuers like Shell or Exxon or Tesla, of which is happening this week, will not be hearing the asset owner's message. They are hearing the message from this kind of middle layer, which will be different across their portfolio. And what that means is that when they are voting, or when they're reporting, they need to be reporting kind of conflicted voting, where actually we've seen in some cases 2/3 or more of the time, asset owners' votes are literally cancelling each other out deep within the portfolio, to the extent that no one may as well be doing stewardship at all. So that's what we want to change. And you can see on the lower diagram, that is what we are changing. So then asset owner can take their seg mandate, their pooled funds from different fund managers, and apply one vote policy or one approach to voting, and then submit that to the issuer so that the issuer hears a consistent message. I'll stop there because I see that someone raised their hand. So do you want to jump in?
Sorry, just a quick question. So one thought I had is, are there any situations where the current approach works? So, for example, if you've got funds in different geographical sectors where you might have to be pragmatic to have different voting approaches depending on what it is. I'm just kind of thinking of as a one size fits all necessarily fit across all sectors, geographical regions.
I would say, like, it's not as simple as I'm making out in that diagram, because where you are an asset owner who is let's just take, like, say, Railpen. I don't know if they're on here, but I'll talk about Caroline's voting policy. She will be thinking about all of the assets that Railpen have, and their approach to voting will be coherent in that, or cohesive in that, kind of there will be common principles, but they will have different standards for different geographic markets, for example. So, like, the basis for governance in the UK is not the same as the basis for governance, the status quo for governance in Japan. It's the Japanese voting season at the moment. So it's very acceptable that you wouldn't, always vote against a chair if there weren't 30% of women on the board. And you would take different approaches to that in different countries because the status quo is just different, and that voting pattern wouldn't be very helpful in some geographies, whereas it might be more accepted in others. But the principle that an asset owner takes to voting might be the same. And actually, the proxy advisors that they work with, like PERC or Glass Lewis or ISS or Ethos in Switzerland, and there's many more independent proxy advisors kind of evolving, they would take that kind of nuance into account, so that they weren't, taking just a rules-based approach, basically, which would be definitely overly simplifying it.
Yeah, yes, thank you.
Okay, good question. So they come back to this. One reason would be voting consistency and consistently, and we work with proxy advisors. So the proxy advisor is the one who is actually coming up with the recommendation. So as per Paul's question, they would be saying, right, here's a Japanese issuer, the votes about gender diversity on the board. We know that the kind of status quo in Japan is X, and we know our asset owners' principles are Y, so we're going to approach it like this. And they're going to decide how to vote in line with the asset owners' views. But because you use one proxy advisor across all of your kind of vehicles, your seg mandate and your pooled funds, you are still taking a consistent approach as an asset owner. And we can work with any proxy advisor. Usually, or at least LGIM's kind of first customers who ventured into this with us have actually come with their own voting policy. So Camden is a good example of a LGPS scheme who have actually been voting with their own policy on their segregated mandate since like 1980 or something. And they've just never been able to apply it to their pooled funds, which do make up quite a significant part of their asset allocation. And so all we've done for them is basically take all of the voting decisions and approaches they were already using and applied that to the other kind of half of their portfolio for them so that they now have a consistent approach. However, if asset owners come to us and they don't have a voting policy and they don't know where to start, there are lots of options, and we can help guide asset owners through that process. And here are some of the proxy advisors that we work with, but we actually can work with any proxy advisor so long as they can set up that data feed for us. One thing that we also do, which we think is important and which we have seen used this proxy season, is for an asset owner to have the ability to vote on individual issues. So this is an example here about asking for additional reporting on child labour issues at one of the issuers, which is a real vote from this season, which came up at many companies. In theory, an asset owner could use our platform to set up a notification for child labour issues or for issues in a specific industry like fossil fuels. And they could come into the platform and vote in a specific way so that they might only be voting on 1 or 2 votes a year. And we have seen a couple of LGIM's clients do that this year, where they vote once or twice on really important issues where they really agree with the co-filer of the shareholder proposal, for example, whether that be Share Action or another organisation like Follow This. But they don't want to vote on everything, because that's too much of a burden, or in fact, they just like the fund managers voting on most things. And we can therefore give them the ability to override right up to the last minute so that their portion of the vote goes the way they want, and then the rest of the votes at other companies fall back into the fund manager's bucket. So it's a really, really flexible feature, which I think, I would love feedback on this, means that any asset owner could, in theory, lean into this. You could have an asset owner with a big stewardship team who wants to do the whole lot, or you could have an asset owner who just knows that they want to align with Share Action on child labour issues or health issues, for example, and they could really easily do that through the platform. So that's a kind of manual voting screen. And then the last thing I would touch on is reporting. So asset owners increasingly need better reporting. They want to be able to, in some instances, sign up to the stewardship code themselves. Stewardship code, the FRC's stewardship code does have a kind of asset owner list of signatories. They also obviously need to do implementation statement reporting, which includes reporting on stewardship and voting. And so what we can do is provide them all of the information they need about their own voting and the fund manager's vote, such that they can really easily fill that out. And we've been working with consultants on that, as well as directly with asset owners, kind of wherever appropriate. So I already talked about the Camden case study, and so I won't go over that again. And I've also mentioned the kind of other end of the spectrum, where some clients just want to vote on a couple of issues, and then we'll write about that in their implementation statement. So kind of calling out the fact that they've really engaged with their fund manager and kind of controlled the vote on a child labour issue, for example, especially if that's important for their strategy, if they believe it's material, or if it's really important to their underlying beneficiaries. And just to talk very briefly about the mechanism, we actually override the fund manager's vote. So the fund manager themselves votes as usual. So in our work with Legal & General, for example, the stewardship team haven't needed to change really any of their processes. There has been kind of small tweaks to make sure that we can deal with late votes, for example, and make sure that we can vote as much as possible. But their process is exactly the same. So they continue to vote with their own policy and with their kind of own manual overrides, the way they usually do when they discuss contentious issues. They vote through the ISS platform, so the mechanism is the same, and the reporting is the same for them too. What we do is go into the kind of proxy voting chain in the background, and we tweak their vote such that it reflects their vote and the asset owner vote as a proportion of that asset owner's ownership in the fund. And we can obviously do that across a really scaled number of asset owners. We are now working with lots of LGIM's clients, and we'll be launching with more from other managers in the autumn. So I will stop there and see whether anyone has questions about why we're doing this or how it works. And I do have a demo if people would like to see that as well, but I'll stop and see if anyone's got questions or comments.
I think, well, let's do a few questions out of the chat first, Georgia, and then I think probably people would like to see a demo. Yeah, please, that would be great, how it works in action. Phil, you've mentioned about the gender investment gap. Do you want to unmute Phil and just mention your point? If he's there, maybe he's still there. Phil, are you there, or are you on mute?
Steve, I'm in a public area. I can't talk.
Okay, I can look at the question there. I can see it.
So there's lots to talk about the problem, but very little being done to solve it. Perhaps it becomes a filter in Tumelo. So this is the gender investment pension gap. Any thoughts on that, Georgia? Or
well, yeah, I mean, I think there's a gender gap across the whole of the investment spectrum. I know David will understand this because he's also working on these types of products, but the pensions gap is a big problem. On average, women are retiring with £100,000 less than men, usually due to working part-time or having a career break. So one of the ways to mitigate that is to make sure that women are engaged in pensions early and are saving sufficiently when they are working full-time and then continue to do so when they're working part-time. And so it really comes down to engagement. I think that and I would say, by the way, it's not just a problem with pensions. It's many more men have private pensions than women do, and many more men have more investments in their kind of private investment accounts, like their ISA, for example, than women do as well. So it's a problem across the whole investment world. I think that engaging people with their funds is a really kind of positive thing to do. If you look at the trading apps, for example, you will see that younger generation tend to really over-index on individual stock trading and are not invested as they probably should be if you were advising them in funds. And that's probably, and then you also have much more men doing this trading behavior, and for few women are invested overall. And I think that's probably because trading is super interesting. You're connected, you're taking risk, obviously, but you're connected with the issuer. You kind of are connected emotionally with the brand. You'll see this week so much commotion about the Tesla vote that's happening, and whether their 40% retail shareholder base support Elon Musk's insane pay package or not. These things are all really interesting for a retail investor to get involved in, whereas a fund can, on the surface, look very boring, and lots of people invested in pensions don't even know that they are invested in the stock market, i.e. into companies like Tesla and whatever else they might be interested in. So I think that voting is a really positive and kind of non-risky way to engage people in what is inside a fund and why that is kind of impactful on the world and interesting to them. And the more we can kind of pull back the name on a fund and the package around a fund and start to show people that actually this fund has an impact on the real world and it is has real companies that you can associate with, the more people will rightly put their money into funds and hopefully engage with their pensions.
Yeah. Great answer, Georgia, I think. Fantastic. Paul, you've got a hand raised. Do you want to ask a question or make a point? Or
So sorry. How do you make sure that people are voting in an informed way and they're not just following the herd? Because I guess a lot of issues are very complex.
Yeah.
And it's easy to make an ill-informed offer an ill-informed opinion just because you don't really know that much about the subject, and that does worry me a bit, that you're giving people, asking them to vote on things that they don't really understand. Or so I just wondered, is that a risk, and how can it be addressed?
Yeah, I would say with pass-through voting, so where the vote is really being cast in proportion to the ownership of the fund, we see fund managers launching vote policy only solutions for retail investors. So how I said that an asset owner can come in and click on a specific issue and vote in a specific way. We actually have that functionality for retail investors in our product, but so far fund managers do not want to launch with that functionality. They want to give a menu of policy options to a retail investor that would better suit their needs. So I think it's quite well aligned to kind of consumer duty in the way that fund managers are thinking about this, where they want to make sure that an investor is buying a product that is well suited to them, kind of from top to bottom. And obviously, you would naturally just think about the risk profile of that product, for example. But actually thinking about, well, how is that product approaching stewardship is also relevant. And therefore, giving that retail investor a kind of menu of options that the fund manager has pre-approved that they believe are kind of sensible is, I think, good from a customization perspective, but mitigates against the risk that you were speaking about. So, for example, this week we've got Elon's pay vote going through, 56 billion and a kind of moving of the headquarters to Texas. So these are votes that the retail community invested in Tesla is very riled up about. They've got 40% support. Elon's running a whole campaign to try and get retail investors to support his pay, obviously. But the two big proxy advisors, Glass Lewis and ISS, are both recommending a vote against. And so in this circumstance, if a fund manager had only given the retail investors a set of options from Glass Lewis or ISS, the retail investor would have no choice but to vote against that, because those two big proxy advisors are saying we really don't think there's any realm in which someone should be supporting, you know, these proposals, and that there's kind of therefore like not sensible to allow retail investors to do that. So not everyone agrees with that approach. Like, some people do think that retail investors should just have choice, and it's their job to inform themselves. It's their money that they're voting on. But so far, the status quo that fund managers have chosen is to give retail investors a policy, and that mitigates against that. And then for our expression of wish product, it's just polling. So we're kind of asking people what they think about stuff, and that's going up to the trustees. And actually, if retail investors are all piling into an issue, pension members are all piling into an issue, perhaps that's like good to show the trustees that they're really misinformed on an issue, and that is a kind of educational moment that they could lean back into, whether it's about, I don't know, I always like to use animal welfare example, where actually pension members really care about that issue, but trustees would say it's not material. And there's a kind of gap in understanding there that people in the pensions industry could lean into. And I think they'd get some good engagement from members on that.
Yeah. Okay. Paul, happy with that?
Yeah.
Excellent.
I'm just
okay.
worried about ill-informed people, that's all. Not understanding what they're voting on.
But that's the case in many aspects of life, isn't it? I guess. But
well, yeah.
Yeah.
Okay.
It's also a bit of a cycle, right? Because if they're ill-informed and you just keep them away, then they never become informed. So I totally hear your challenge, but trying to break down the barrier to pull people in is difficult without giving them something to kind of go on. So
the options they're given.
Yeah.
Yeah.
Thank you.
Okay. Brilliant. Cheers, Paul. Steph Gold, I mean, you put a comment regarding engaging women, raising awareness. Steph, have you got any points to add to what Georgia said, or
well, I think it goes back
Steph?
to what Georgia says. It's engaging women, and it's, you know, it's making sure that we talk to women about, you know, when they come back to work, what is it that they can do to meet that gap, and things like that. So there is that engagement piece that's key. And I don't think many schemes or companies currently have a strategy in place to communicate specifically around, and it's not just women, it's also men, to support women to, you know, bridge those gaps.
Yeah, no, I appreciate that. Yeah, Brian, you got your hand raised before we move on to the demo, but
yeah,
come on, Brian.
This may come out on the demo, but out of interest, Georgia, of all the people, the individuals who could vote using your system, what's the sort of the percentage turnout of people who actually do express? Is there a way you can capture that, or?
On our past-due voting product, we actually don't have a retail solution live today. So we've really focused on the institutional investor.
Yeah.
Partly because I guess that is usually the priority of the fund manager, and even retail usually comes through the institutional. So I would say actually the pattern that we're seeing in the industry is that the pension funds are the most engaged in this issue, probably because of the implementation statement and just higher focus on stewardship, TNFD and that kind of thing. Then I think that after that, we're seeing wealth managers engage, but again, at a firm level. So there are managers like LGT, for example, who already vote on behalf of their clients on kind of single line stocks, and they want to be able to vote on their third party funds, but they're not intending to give the vote to the private client. They're still thinking that they'll do it as a firm. So yeah, it's hard to answer that question. In terms of AUM of the clients, that's something we track. We track like what's the AUM of clients we currently have voting, and we're at about 65 billion. So there are some really big clients voting through our platform, but very few of them are pension members or I guess retail investors today. I think that would be different in 2 years' time. I want to say a year, but the industry moves so slowly. We are launching a retail product in September with a big fund manager, which will be on 8 ETFs. I would expect initially that the uptake of that on retail is really low, and that we see uptake from the wealth manager level, but low uptake from retail level, just because the level of awareness on these types of things is tiny. Like no one knows about stewardship.
Is there a role you can play? The people who do vote, the fund manager level, the trustees, the wealth managers, is there an education piece that you can help them become more aware? Because just because you're a pension trustee doesn't give you any special insight to what your members need and what your members believe.
Yes, I think there's 2 ways that we do that. One is through a kind of polling product that we give to pension funds that they can give to their pension members. So we do see the uptake on that is just completely depends on how well it's implemented, to be honest. So where it's kind of in the system and members, when they check their pension, they can see the voting. It works really well. If it's like buried at a website, it doesn't work super well. So that would say there's a spectrum there. But that data does get fed up to the trustees. And so we will regularly, for our clients, be presenting to trustees to say, there's been a big surge in interest in, this animal welfare issue, or this, climate issue is consistently high, for example, ranking above other things. And that does give an indication to the trustees about what's important to the beneficiaries and how best to communicate with them on these types of issues. We then are thinking about how to educate trustees about, the problem that exists. I think a frustration of mine is that I think a lot of trustees, because they don't have very much time, don't think very much about voting or stewardship, and think that it's probably just fine. And the managers have got lots of really good statements about what they're doing, and there's actually not much data to back that up. But no one's really running a comparison, for example, of here's how I'd love to vote, but here's how my managers are voting, and here's the gap. Like that comparison rarely happens. I know there are some consultancies that offer it, and we try to do that pro bono to kind of raise awareness. But I would say very few trustees today are asking that question. And I personally think that needs to change, and it will change, especially because of the focus on net zero. So all of these big pension funds have made net zero commitments that are going to be impossible to reach unless the companies within the fund change. Pension funds have got to a point where they can't divest anymore. It's just too risky and too costly for the underlying member. So what they need to do is convince the underlying companies to change. And the only way to do that is through stewardship. So how your manager is voting, and whether they really are, for example, did your managers vote against the chair of Exxon this year? I would say they should have. And CalPERS, the biggest pension fund in the world, said they should have, as did the Norwegian Sovereign Wealth Fund and some other really impressive asset owners. But I would say so few trustees will ask their managers that question, and that irks me, and we'd love to change that.
Yeah, thank you. Lovely. Thanks, Georgia.
Yeah, great answer, Georgia. And I know you've got some clients in the sort of master trust space, and again, master trusts will, I suppose, traditionally be far-reaching in terms of age groups and gender group, categories. Are your statistics on usage and take up in that space? I mean, that's possibly a little bit closer to the retail side of the market with pure AE master trusts than pure retail, if you see what I mean. But
yeah, we definitely see that's such a challenge, isn't it? I'm on Aviva's governance committee, and we're constantly talking about that kind of issue of just such a spectrum of investors that you're handling, from people that are kind of coming up to retirement, who we obviously talk about a lot, and they've got big pots, or we hope they have big pots, down to kind of really young investors who I guess maybe you don't talk about them so much because they're not preparing for retirement. They're just kind of in the auto enrollment scheme. But you obviously do want to engage them because you want to make sure that they are contributing as much as they can afford to and are as educated as they can, and they were really using those moments of opportunity to educate them. And so tools like this are really useful for that. We definitely see higher engagement from between the kind of 24 to 36-year-olds. It's not true across the board. There's a long tail of people that are interested outside of that age bracket, but that is the age bracket where we see highest engagement on the polling solution for sure.
Yeah, they're more passionate about issues and the voting than maybe other members.
Yeah, and I mean, not necessarily better informed either. I mean, I think that's, we sometimes people will climb in on a CEO pay issue on our dashboard. I'm looking at Helen's on my team here, and she does a lot of our vote writing and that certainly handles that whole process. And we'll get people writing into us, saying, well, I think a CEO should be paid loads because they bring in loads of value. Like, it's not all like, super socialist, like 25-year-olds, like voting on the platform. You definitely see people approaching it like pragmatically and sometimes very conservatively. And perhaps that's a 25-year-old, or maybe it reflects that there's someone kind of pretty educated and who's kind of been through the machine and understands how these things work or how it works today, and is commenting from that kind of experience. So we definitely get engagement across the board and different people saying different things. And all this is interesting data for the trustees to be able to see and hopefully in aggregate take some action on.
Yeah. Okay, well, thanks for that answer. That's very kind. Henry Tapper, you've just joined us in the last few minutes.
Hey,
have you got any, before we have the demo, Henry, do you want to say a few words on the services that Tumelo are offering and the importance of voting?
No, I don't.
Okay, well, I thought I'd ask.
I can only say, I won't say much about what Tumelo are offering because I think it's great, and Georgia knows that. But what I would say, I'm 63. I think I'm 63. No, I'm 62. I keep on making that mistake.
You're older than you
That's a
think.
sign of old age. No, and I've got a lot of money in DC relative to other people, but I've got no way of voting my shares. Absolutely no way. And I think it's a shame because I've been with Legal & General since 2012. And golly, I think it's about time that I was finally allowed access to the Tumelo system via their workplace pension. I don't know if you've got a comment on that, Georgia, but it's been a bit of an ongoing sort of issue for me, and I'm sure for you too.
Yeah, I think we are, I guess, with all fund managers, we've typically started with a set of funds and then rolled out. Like the product you're talking about, our polling solution is done scheme by scheme, and that's, I guess, based on what makes sense from.
I'm in a GPP, unfortunately, not.
Yeah, okay. Yeah. But I definitely think, I mean, Legal & General, in fairness to them, are obviously, I would say, quite ahead of the curve in offering any kind of voting. It's annoying for you, clearly, that it's not across all of the funds. But I do think that there is an opportunity for the whole fund management market to lean into voting, and that it shouldn't just sit with the big passive providers, and that actually both asset owners and pension members below should have a voice in that process. I guess we're in the process of doing that. The challenge, as you will all be aware, is that there's quite a lot of legacy technology in pensions. So plugging a kind of new solution into some of the legacy systems is easier than others. And that tends to be why some aspects are prioritized over others, or some kind of tranches of business are prioritized over others.
Yeah, I just don't think that GPPs are the right place, to be for members when they haven't got a proper resourcing structure like a trustee structure. The IGCs just don't seem to be working in the same way. Where does the information go to, and so on? It is telling me something about stewardship, which is that the occupational pension route is a much better model than the contract-based route for people like me. But I know that I'm not typical.
Yeah, I think to comment on Derek's point, I agree with you. I think Derek's made a point here about the advisory vote at Exxon this year on exec comp, and the directors, and pay relating to greenhouse gas emissions. I would say the voting season this year was extremely disappointing across the board. I think asset owners and pension funds and every type of asset owner everywhere should be paying really acute attention to that trend, because it's not going in the right direction. It was for a couple of years when kind of ESG stocks were booming, and it's absolutely not now. And I think it is really disappointing. A couple of things I would say are that you can very clearly find managers who will support change on these issues. So if I just take Amundi, for example, they have co-filed resolutions at fossil fuel companies this year, and they're a very reputable fund manager, whilst other managers like them have voted against those resolutions. So my point there is that there is clearly some subjectivity here, and it is okay, I think, for asset owners to lean into this and have a voice, because there is not a clear right and wrong. There's clearly different ways to look at this, and depending on your kind of agenda and how long term you're thinking, you might vote one way versus another. And I think it's wrong for asset owners to assume that all the managers they work with perfectly represent them and are doing so on an ongoing basis. I think this year should be proof of that. But so I hope consultants on this call and Tumelo and others can continue kind of probing those questions at asset owners to see whether it's something they're paying attention to, especially those who have net zero commitments, because I think they have a duty to investors to do everything they can to try and reach those.
Yep. Agreed. Okay, do you want to go on to the demo, Georgia? Do a quick demo, and then there'll be a few more questions, I guess, at the end of that. But are you happy to do a quick demo? So
yeah, my demo is really fast. This is just true to the word. It is a demo, so there is not any real client data on here, which makes it slightly less informative, but hopefully you'll get the idea. So basically, if you're an asset owner, you will be able to see all of the funds that you have exposure to. So hopefully, if these are your funds, you would recognize them. You can then look at the holdings in the fund and see more about the fund manager and their conflicts of interest policies and all that kind of stuff. So more information about the investments. The second tab takes you to the meetings. So if you have got a vote policy already set up with us, which we will do for you at the beginning of the relationship, you don't need to use this page. But if you want to override your vote policy, or if you want to vote on specific issues, then you would come into this screen to be able to do that. And we will typically send you notifications. So if you're an asset owner, it's actually unlikely that you'd be ever scrolling through here. It's likely that you would get an email from us straight to your inbox saying, hey, there's an Exxon vote coming up. We know you wanted flagged about fossil fuel companies. Come to the platform and have a look, and it would take you straight to that vote. But for the purposes of demoing, there are, on the next page, these are all votes from yesterday, lots of Japanese votes going on. So you won't probably recognize the names of any of these companies. Yamaha, people will know that name, I guess. Here you've got all of the underlying votes, each kind of item on the ballot, it's called, to appoint here the various directors. There tends to be few shareholder proposals at Japanese companies, so there's less controversial stuff. It's increasing, but not the same as the kind of big US S&P 500. So here you're just seeing director elections. You would then be able to vote. This demo doesn't have a vote policy set up, but if you did, it would tell you that your policy was recommending a vote in favour, for example, or for. And if you did nothing, that vote would go through as for. If you want to, you can come in and you can override, and you can also leave a comment, which will be an audit trail for you and your beneficiaries, as well as being sent, if you'd like it, to your fund manager so that they understand why you voted in a certain way. And I think this is important, this comment section, for being able to nudge fund managers in the right direction. So even if you are voting yourself, you can still tell the fund manager why you're voting in that way and hopefully influence them and the wider book, which I think is important, that we don't just get pension funds kind of voting their own money and then not paying attention to what their fund manager is actually doing. And we reinforce that in the reporting page as well. So you would be able to see the proxy document from the company, as well as the vote policy, and you can see kind of how long you have left to vote, etc. The last page is just reporting. So here you've got various different columns, not all of them are on this demo, but you would effectively be able to see the company, when the AGM was, the theme of the vote. So this is a director vote, this little green person. You'd be able to see how you voted, what the vote rationale was if you'd filled in that comment box, how your policy recommended you vote, which will often be aligned because it will only not be aligned if you've come in and overridden it. You can also see the vote outcome. So once that's released, we will put it into the platform so you can see whether your vote was in fact successful or whether other shareholders did not support it and it didn't get majority. Other columns that we can add in here, or we do add in here for us owners, are how the fund manager has voted. So we will pull through a feed so that an asset owner can compare after the season or during the season how they are voting and their policies recommending they vote versus how the fund manager is voting. And they can see whether there's a big gap there, whether it's widening, whether it's closing. And they can also see the fund manager's vote vote rationale. So if, for example, as happened a lot this season, if you're an asset owner and you supported the Shell climate vote and your fund manager didn't, you might want to at least understand why they didn't. And therefore you can see their rationale on this platform. And that can all be exported. We do also provide many other forms of reporting because asset owners want reporting in their own way. So we do Excel spreadsheets and PDFs and everything else that an asset owner might want or need to be able to fulfill their reporting, as well as reporting for fund managers. So hopefully that gives you an idea of like what someone like Brunel or GMPF or Bedfordshire, like someone on their team will have a login and actually be going in and kind of clicking and downloading these reports.
Yep, that's great. Thank you very much indeed. There was a hand raised, may have gone down, I think, but was that Paul or Brian? I don't know. Who? No? Okay. I saw a hand raised, but there we go. So thank you for that. Presumably, is there a demo of that can be sent out as a link? So if people want to see the demo, is there a link that could be independently sent out via email or something like that, Georgia? Or
oh yeah, I mean we could do that. If someone gets in touch with me, then we can set people up with an account.
Yeah, brilliant. Okay, like a demo account or something like that, which would be good. Yeah, that'd be cool.
Could do that.
Which is good. Okay. And going back to the point, obviously, I know Henry had you were talking earlier about group personal pensions, and obviously you've got IGCs, but IGCs are very much, the heart of the IGCs would probably have come from, to a point, the trustee community. Do you think there's more that can be done with IGCs then? Because I mean, the GPP world is big, huge world. It would be nice if GPP members had what Henry would like, or what everybody else gets, in say a master trust. But how far away are you, Georgia, from that opportunity, do you think?
Yeah, I think it depends on a couple of things, I guess. It partly depends on how strategic it is for the firm that's running the contract-based scheme or the master trust. If the master trust is their baby and that's what they're trying to drive, then they're going to add the engagement solutions to their master trust, just purely from a commercial basis, right? I agree, though, that members across the board should be engaged and should have access to these solutions. I personally think that this level of customization, this level of understanding is important from a consumer duty perspective. We are meant to be making sure that all customers understand the products that they're buying. And I would say no customers understand how their pensions are being voted, zero. And it's obviously not a priority of the FCA to be thinking about kind of voting in relation to consumer duty. But if you were just to extend the principle of that thought, then you very quickly get to the point where you're thinking, yeah, I want to make sure that my clients understand how I'm voting. And that's particularly relevant where you have made statements. So let's take the pension funds that have said they are net zero. A customer thinking they're buying into a net zero fund will automatically assume voting is aligned to that. And if it's not, I would say you need to be making that very clear to members. Similarly, if you buy an ESG fund from Vanguard, it will vote as Vanguard, not as the ESG team at Vanguard. So your voting will not necessarily be aligned to the label of that fund. And I would say that our SDR rules in the UK are dealing with that now, but that has been a kind of long-standing problem where stewardship has not been customised to the products that people think they're buying, which means people are kind of only buying half a product that they understand, and the rest of it is kind of behind closed doors and not aligned to what they're looking for. So I do think that this will change. It's just slow to happen. And I think that trustees should keep pushing for that. And Aviva's IGC, I am on that, and last year we wrote extensively about Aviva's voting, and we called out areas where we thought they hadn't followed their policy and areas where they thought they had. And I think we did a lot more than others on that. I don't see a lot coming from IGCs on stewardship, so it would be great to see more. I would say Master Trust feel like they're more under the hammer.
Aviva have certainly led the way. I mean, going back to the early days of share action reports 15 years ago, it was always Aviva at the front, and I'm glad you're there. The other question I was going to ask you, I tried to read the Forbes article about you, and I saw the way in which it was promoted, lots of words like woke and so on. And I just wondered how you felt about the presentation of yourself and Tumelo in that environment.
I don't know, Helen, what do you think? I was going to say, if Helen and I could control what journalists write, we'd be rich, Henry. Like, obviously we can't. But how do you feel about that, Helen?
You're on mute, Helen.
Sorry. No, and I've also got feuding dogs in the background. Why put me on the spot?
Sorry.
No, I think, well, from my personal perspective, anything that we can do to again feed into that education argument, to shine a light on an area that's not understood by so many sort of investors, pension members, anything that can make it feel like they're more engaged with sort of themes, brands, issues that they can connect with, going back to the engagement piece, I think is a good thing. Having Georgia on the front of a publication where people will be interested to hear what you have to say, maybe they can identify with her, I think it's a good thing. Obviously, being, we don't necessarily want to be labelled like a woke organisation by any stretch, but those kind of things aren't always in our control. But I personally was sort of really proud to be feeding into a conversation that I think so many people need to be informed about.
Yeah, I guess it depends.
Yeah,
at the end of the day, we're an infrastructure provider. So the thing we do is actually quite boring. We just move one vote from one place to another. We're not we can't force people to vote for better climate outcomes, for example. We're just providing the means to democratize that. But I do think consumer-facing journalism kind of loves to take that angle. There was another piece in the Wall Street Journal where, it wasn't so focused on Tumelo, but we were in it. And he focused almost entirely on the big Tesla vote. And I guess it's just the way that they think they can get the retail investor's attention.
Yeah.
Is it a problem? I mean, you obviously got this hugely destructive, what's it called? The whole Trump thing, coming at you. And here we are in Europe, kind of like this wokey Europe thing, which Trump would like us to be seen. Is this damaging to your business, or does it actually elevate your business to a different level? I'm genuinely interested in whether Trump is actually a good or a bad thing for a Tumelo.
Yeah, Henry, to give you a penny for every time we have this debate internally would be challenging, because this literally happens all the time. I think, I don't know, but I think if the problem is that, and I'm not trying to sound like the UK government here at all, but the problem is that so much of our UK pension assets are invested in the US, and not just in US companies, but also in through US institutions. So, BlackRock, Vanguard, State Street, Capital Group, Northern Trust, all these big organizations. And so obviously what will happen when Trump wins, if Trump wins, and it's already happening because everyone's preparing for it, is that those organizations would effectively need to be blacklisted by Europe, because there is just not enough alignment between what the European regulators and the EU, even with a little bit of backstepping, what the EU is demanding of asset owners and fund managers to do versus what those US firms will be under pressure to do, which is obviously the opposite. So I do think in a way that's positive because we are a customization solution. So if you think about it from a fund manager perspective, we help them deliver more stuff to a greater range of clients who want different things and allow them to do that. So in theory, you can be a pension fund here and you can retain your kind of low cost indexed with BlackRock, but you can make sure that all of those assets are voted in line with what you care about through customization. So on the one hand, it's good. On the other hand, it could be really bad for our business because in a Trump world, I have the sense already that people are afraid to talk, like they're afraid to say what they even think. And they don't want to put their head above the parapet. And voting is putting your head above the parapet. So CalPERS, for example, came out 3 weeks ago. I was so pleased to see it, them calling out Exxon for suing a shareholder who raised a climate proposal, and Exxon obviously took them to court. And CalPERS came out and said, we're going to vote against the chair. We think it's unacceptable governance for you to sue your shareholders. In a Trump world, are CalPERS too scared to do that? And does people stop talking about voting? Maybe. And that would be bad for our business because our business is all about giving people a voice and helping people feel empowered. And if everyone's too scared to be empowered, then we have nothing to do. So I think making sure that asset owners feel strong and protected and kind of there's a bit of a safety in numbers effect that we see, all of that is really crucial. I guess a positive thing about our platform is that it can be below the radar, so an asset owner can crack on and do all their voting without having to shout about it in the media, so it's protective in that way, but it's not ideal. So Henry, I don't know the answer to the question. I hope that he doesn't get in.
Yeah, it sounds to me as if you're going to have to be less of a campaigning organization and more of an infrastructure organization in that kind of world, and that's just the way it is. If that's the way that America develops, but it may not be. A point's been made in the comment by Brian that it's not just USA, it's France. Whatever you might think of the right-wing backlash and whatever, it looks as if that's a threat to the kind of values that you promote.
Yeah, and I mean, we try internally to, if you look on our website, we are an infrastructure organization. The fact that there are personalities within our business who care about certain issues hasn't stopped us from being able to voice them. I mean, we're all about giving people a voice. So that's the line that we've tried to draw in terms of our brand. Like, we are not campaigning. We would never put forward a shareholder proposal. We are not encouraging asset owners actively to vote in a certain way. But I will not be stopped from going out and saying what I think is important personally, and my firm is there to enable people to vote that if they think that's the right thing to do. So I guess that's the balance we've tried to strike. And there are asset owners in the US who lots of asset owners in the US who think that way too. It's not the whole of the US.
Yeah, and a similar vein, I guess, in terms of lobbying, obviously promoting stewardship and governance with a Labour government. Have you already started connecting with a potential new world post July?
No. if anyone's got the right connections there, let me know.
Oh, Henry's got loads of connections.
Oh well, Henry, hi. Yeah, we'd love to do that. And that's asking for good governance is, you can ask anyone, ESG or anti-ESG, they all care about good governance. So it should be aligned.
I think there's a cross-party consensus that we want ESG in the UK and in Europe. It's not a divisive issue unless your name begins with Nigel,
Okay, Henry, thanks for that. Yeah, I mean, it does waterfall down, though. The government will waterfall down to DWP and the FCA, and it waterfalls down to the regulator, and it's important. It's important that pressure is applied from all parts of our industry on the regulators to push for change. And Georgia, you're a beacon, I think, for that at the moment, and Helen as well, and Tumelo. So you're doing a great job, and I think it's been a really, really interesting presentation. Absolutely fantastic input. Thank you, Georgia. Really good.
Thank you.
Are there any other questions before we say goodbye to Georgia and Helen? Any other questions? Thanks, Brian. I like that. Nigel
I'd like to
Farage
make
is
a
an anagram of. I'm not even going to say that. I'll leave that for everybody to read on their own. Thanks for that, Brian. Brilliant. Sorry, Henry.
I think it's worth saying that from our point of view, as a community, that it's at times like this when the going gets tough, that it's right that people like us stand up for people like Tumelo, because it's easy enough to support Tumelo when everyone's swimming in the same direction and it's trendy. And then when things get tough, as they will do in the States the rest of this year, we've got to be clear about where our value set is and make sure that we do keep behind you guys. Yeah. So courage, mes amis.
Yeah.
Thank you. I appreciate that. Yeah, all the help we can get. And also, the most helpful thing would be for all of you in the pensions world to talk to asset owners and probe them. How did your fund manager vote this season? Do you know? Do you care? And if not, if it's a no to both those things, why? And is that actually you doing your job well? And could you do better? And could Tumelo help you? Yes.
There you go. That's what it's about.
Okay.
So brilliant.
Thank
Georgia,
you.
thank you very much indeed for a presentation. Really enjoyed that. Thanks everybody for joining. Hope you enjoyed the session. The video will be up later today on our website, pensionplaypen.com, under the media tab. I know Henry will probably put a little snippet out on LinkedIn at some point as well to promote good stewardship and Tumelo. So it's great. Next week we are hoping to get William McGrath from C-Suite to talk about running on DB final salary schemes. So hopefully you can join us for that. And as usual, we pray for peace in the East and peace in the Middle East. Every week we do this, Georgia, and I cannot believe it's June 2024 and we're still saying it. So pray for peace in the East, peace in the Middle East. I wish everybody a fantastic rest of the day and rest of the week. And hopefully we'll see you at the next coffee morning event. And Georgia, thanks again for your very kind input.
Thank you.
Lots
Bye,
of clapping.
everyone.
Lots of clapping.
Cheers.
There you go.
Have a great day.
Thanks a lot. Cheers, Georgia. Take care. Bye, Helen. Thanks.